All right, looks like we're live. Had a little bit of difficulties there, but here we go, guys. Here we are. Welcome again to another episode of the Bitcoin News Show right here on the World Crypto Network. Thanks so much for joining us again on this beautiful Sunday afternoon. We really appreciate it. Love having our little ritual here talking about Bitcoin on Sundays. We got a lot of stuff to talk about, guys. We have an amazing list of panelists. We're hoping Simon Dixon can join us. He seems to be a little bit fashionably late, but we hope that he can come in. He's definitely welcome anytime. We've had him on the show a bunch of times, so should be a good time. So first, guys, let me just go through a couple of quick bits here before we get into the introductions and into the main topics of the show today. There's a couple things I want to mention. Today, Tuur Demeester actually had a tweet out that's talking about the original problem, or talking about the original message in the Bitcoin blockchain, right, with the chancellors on the brink. So he was citing Vitalik's recent tweet where he said, quote, "Excellent. I think doing rescue forks is exceptional. In exceptional circumstances can be a great choice for a nascent early stage blockchains." Now, remember, guys, that is a slippery slope, right? We saw what happened with the DAO already. And so now anytime anybody loses money, they go straight to Vitalik. So this is the whole reason why Bitcoin was created in the first place, right? You guys, a blockchain is not a blockchain unless it's immutable. In the case of Ethereum, right, when you can roll back the blockchain, that pretty much just makes you a database. So I have the link for that in the show notes. Remember, guys, I have the links for all this stuff in the show notes, so make sure to check that out. I just want to quote Gregory Maxwell on this. He says, "If there is even a choice to make that the system has, if there is even a choice at all to make about rolling back the chain, then the system has already failed because PayPal and Visa do reversibility better and didn't require a multi-billion-dollar pre-mine, right? So that's something to keep in really keep in the front of your mind, guys. Remember, a blockchain is not a blockchain unless it's immutable. And furthermore, I just want to read off a quick list. Mr. Peter McCormack had a great tweet out there where he went off on a couple of made a really bullish list of things that's coming down the line with Bitcoin and crypto. So I just want to read those real quick. Number one, we got positive U.S. regulatory news, which we will be discussing in today's topics. Coinbase adopting SegWit. Robinhood introducing zero-fee crypto trading with 1 million waiting lists. 1 million people, actually over 1 million people right now are still waiting in that list to talk Robinhood. Then we, of course, have the Lightning Network rollout, the positive Korean government policies. And then now I added this one myself, Mr. Gregory Maxwell launching some Taproot and Graftroot papers. That is really awesome, guys. So tons of bullish news, tons of stuff coming down the pipe. Really excited. The price, of course, is not reflecting the fundamentals right now. So make sure to keep that in mind. And then finally, a couple of people have been asking me about the Satoshi Roundtable, and I know I'm a little bit curious myself. I didn't get a chance to go, but there was a tweet out there by Miss Caitlin Long, the former chairman and president of Symbiote.io, who also was a 22-year-old Wall Street veteran. She had a couple of things to say, and I just wanted to quote a couple that she said. She basically said at the actual roundtable event, there wasn't any talk of Bitcoin versus Bitcoin Cash. It seems that is now in the past. That's pretty much not even a debate anymore. Of course, she says the hedge funds have invaded the crypto market. The pace of change is still amazingly dizzying, still remains dizzying, and of course, we're still expecting a little bit more regulation. So that's kind of what they were talking about at the Satoshi Roundtable. Pretty interesting stuff. Without further ado, let me go ahead and introduce my amazing panelists, and then we can get started, guys. So first, we have Mr. Alex here. I'm going to make sure I got the right name. Mr. Alex Bosworth, developer and creator of y'alls.org. Alex, how you doing today?
Hi, good. Thank you.
Thanks so much for joining, man. We really appreciate you and all of your amazing demos that you put out on Twitter. We love the lightning demos. This guy has a ton of great little short video demos of using the Lightning Network. I highly recommend everybody check that out. And again, guys, I will have the Twitter links to everybody here in the show notes. Looks like we just got a message from Simon saying that he is coming in soon. He's just a little bit late, so we're looking forward to that. Let's also introduce Mr. Daniel Robinson from Chain. How you doing, Daniel? Awesome, man. Yeah, we also had Daniel on before talking about Ivy, which is really cool. A nice programming IDE for programming smart contracts on Bitcoin. And then we also got Mr. Marty Bent from Tales from the Crypto podcast. Marty, how you doing?
Doing well. First time, long time. Thanks for having me.
You bet. This is the first time for Marty on the show, so we're really glad to have him. And of course, finally, Mr. Francis Pouliot from Cadillacsy.com. Francis, how you doing?
I'm doing great, Vortex. It's great to be back. And I just want to say it's funny that you mentioned Tuur's tweet about the newspaper being in Satoshi's blog, because I actually just finished writing like a 15-page article about the blockchain timestamps, and I spent like 5 pages talking about that newspaper timestamp. And I'll just ask a little question there for you, Vertex, is how likely do you think it is that Satoshi bribed the editor of the Times in advance in order to secretly mine, to do a secret pre-mine, which would qualify, Bitcoin as a security? And how hard is it going to be to prove? Is it provable? So yeah, that's
of course
an article.
Of course, it's not provable, man. No. This is but this is really good point though, and really good to bring attention to this. Tuur, thank you for bringing attention to this again, so people can understand. Because people they see all these shiny objects with Ethereum, they see all these things, and they're like, oh man, this must be the latest and the greatest technology because everybody's talking about it, right? But no, that's why we have amazing people like Francis on the show to bring you guys the news about the real interesting technology that's happening out there in Bitcoin. So thanks again, Francis, for that. Thanks for being here, man. I really appreciate it. And he's got his own podcast coming out pretty soon, guys. So look forward to that sneak preview. Without further ado, let's go ahead then and get to the first topic. Simon's still going to be in here in a few minutes, so let's get on to the first topic here, which is the CFTC and the SEC testimonies. This was kind of some big news in the crypto world this week. Actually, some positive news. People seem to think this was very positive for Bitcoin and cryptocurrencies with the remarks that they gave to the senators. So let me ask first. Let's go to Daniel first. Daniel, what was your thoughts on the actual hearing this week? The testimonies. Was it positive? You think? Was it a positive outlook? And is it good for crypto? Oh, you're still muted.
Sure, yeah. There you go. So as far as the general tenor, I think I'd agree absolutely with those who thought it seemed really positive for the space. The reaction, I think both Clayton and Giancarlo came out seemed like they were very knowledgeable. They were well prepared and really sort of familiar with the technology in the space. And I think both of them have backgrounds that are somewhat encouraging for that. Giancarlo especially. I think it was very informative. So I'd definitely recommend. I learned a lot. From reading the testimonies, and they sort of go over a lot about what jurisdiction they currently have, and a lot of people I think don't know that really there isn't it's relatively well established that Bitcoin, for example, isn't regulated as a security. CFTC treats it as a commodity, but that means in fact that it doesn't have jurisdiction over spot trading in cryptocurrency. I'm sorry, it doesn't have regulatory jurisdiction over spot trading in cryptocurrencies. So they can't, make exchanges require particular things from their users, or sort of go in and just investigate and set rules for how exchanges have to operate. Nebulously has been so far, it seems like a pretty good recipe for government, how government can improve the situation, and with preventing some fraud in the crypto exchanges and in stuff like ICOs without being getting too involved and setting things and interfering too much with certainly with exchanges, but also with with anything else with just the transfer and usage of cryptocurrencies. So all in all, I think very encouraging. They both said explicitly that they're not asking for additional regulation or additional regulatory authority over cryptocurrency. I think they don't want that. They want more funding, as they always do. But in general, I think it was relatively encouraging. The one to watch out for is probably Clayton's comments on ICOs, which he's really kind of positioned himself as he sort of has to do, because right now it's a bit of an embarrassment, I think, for the SEC that there's so many things going out there that are really sort of blatantly just sort of flouting what people would normally do in when they're raising investment capital. And so I think you're going to start to see, as they kind of ramp up the enforcement on that, some more actions, probably some high profile ones. I have no idea where they're going to start or honestly where it's going to end up. But I think we've been waiting for that shoe to drop for a while. So there was nothing particularly sort of negative in the testimony there.
All right, very good comments. Yeah, it seemed that it's true that the CFTC chairman was pretty bullish on Bitcoin in general. But yeah, the SEC chairman definitely did not like ICOs. Pretty much, I believe the quote was something similar to, he has not seen an ICO yet. that doesn't look like a security to him. So very interesting news. All right, let's go with Francis and get your thoughts on this week's hearing. And though you are in Canada, I'm sure you probably paid a little bit of attention to this hearing with to these testimonies. So what are your thoughts on it so far, Francis?
Yeah, well, I definitely paid attention. I haven't read the whole transcripts yet, but one thing that I noticed is that the CFTC actually has like fintech initiatives. It seems by looking at some of their documentation that they're probably close to a few groups of Bitcoin experts that they're advising or stuff like that. And it seems like they're promoting initiatives. It's exactly what they did in Canada, the Ontario Securities Commission. So these regulators are smart. They're kind of like incubating the community, sponsoring some stuff, getting some intel. And I mean, it's really fantastic because they're having this really ideal, I guess, view of the situation where they're saying, listen, we're not exactly sure what's going on, but we definitely see that there's a transformative potential, and we definitely don't want to be the ones that are accused of like stopping progress, which is definitely a good attitude. And for sure, they're very knowledgeable, which is super interesting when you compare that to the discussion which is happening in Europe right now. So this is a complete opposite. And by the way, so this is kind of what happened in Canada and I think a bunch of other countries. So I mean, I'm really happy to see the CFTC and the SEC kind of following that, that approach to really understand what's going on. When you look at what's going on in France, there were some hearings recently, and the comments are just out of this world. Like, you cannot believe they're trying to interpret like what public key crypto is, and completely misunderstanding like the Bitcoin actually doesn't have two keys because, and you have these senators like talking about this thing. It's like, what are you talking about? And now you have the Minister of Finance in France, Bruno Le Maire, which is teaming up with his counterpart in Germany, and they want more regulatory power over Bitcoin on many different fronts, which is not at all the feeling that I got from the CFTC and the SEC's testimonies. So yeah, I mean, it's definitely positive, and it seems like the US is going in a good direction after having started off with a little rough start with an early bit license, which was really too early. So yeah, I mean, definitely a good direction. I'm bullish on that for sure.
Awesome. So yeah, so far so good, guys. So far we have a lot of positive comments on the CTFC and what they've been saying, and I agree. The senators seem to be pretty well informed. I mean, sure, there were some that were pretty up there in the age brackets, right? But surprisingly informed. Remember, they've seen a lot of stuff like this with the internet, right? They kind of had a lot of these similar conversations already with the internet as far as a do no harm, light touch regulation. So very interesting stuff. Very interesting comments. I know that I was definitely bullish after the testimony. So we got, ladies and gentlemen, we got Mr. Simon Dixon joining us now. So very, very excited to hear what Simon has to say on this. We have kind of a full panel here, Simon, so might have to ask you to keep it a little bit shorter than normal, but I have you muted there, so make sure to unmute. But ladies and gentlemen, here we have Simon Dixon from Bank to the Future. Simon, how are you doing? You got to unmute, Simon. Yeah, it's at the top. This is how we do it live, ladies and gentlemen. It's hard for Simon to see because looks like he's on the beach there, somewhere where I want to be, on the beach in the sun, in the sand. Beautiful. Well, Simon's working.
Me?
Yeah, there we go. We got you, Simon. Sorry about that.
Cool. Firstly, sorry for being late. I just got caught in this lovely environment. I'm here in. I just been at the Satoshi Roundtable. I'm here in Acapulco for the conference, which I'm saying. Is that right?
You're breaking up a little bit, Simon. So maybe one more intro. Let's intro one more time. Go ahead and say that one more time.
Okay. We're talking SEC and CFTC Senate hearing. Are we okay?
That's correct. That's the topic that we are on.
Okay. Hopefully my internet lost. Sorry, I'm at the Acapulco conference at the moment. So.
Absolutely
cool.
Absolutely beautiful backdrop behind you, Simon. Just want to say, beautiful backdrop, ladies and gentlemen, for those who are tuning in live here on the YouTube stream. The audio people can't hear it, but absolutely beautiful background, Simon. So sorry, go ahead.
Yeah, I was just trying to one up your new World Crypto Network background, so I thought I'd give you a sea view. So look, Senate hearing, you've got to understand what this was about. 2017 was an absolutely explosive year. We went up to $700 billion market cap. This could no longer be ignored. If we continued on the projectile that we were on, governments were going to be disrupted. Everybody was going to be into crypto. Nobody was going to be in tax. Everybody's going to be, doing ICOs in order to buy out Google shares and raising more than they can do, and hostile takeover bids through ICOs to the IPO market. All the IPOs were looking at what they can do in the blockchain. They were starting to engage in pump and dumps as well by doing ICOs and integrating tokens into their public companies. People using the word blockchain just to try and get an increase in their share price, and then they can do leverage buyouts and all sorts of stuff, to revive dying companies like Kodak. And so, we were on this kind of path where the SEC could no longer ignore. So how do I interpret that? That is incredibly for our industry. Bitcoin, this tiny, set out to disrupt, to create a peer-to-peer payment network, had implications on every single financial product, the entire financial system. And now they're realizing that this is actually systemic risk in the entire system if they don't try and gain control over it. Now, what happens with that is incredibly interesting. What comes next? There will be, and I've always said, there will be a regulated side to the industry and an unregulated side to the industry. People will use this technology to circumvent, for countries that have an agenda, and that country's agenda might not actually be something that is in line with that the Bitcoin's money policy or whatever it might be. And so there you will have these unregulated, anonymous peer-to-peer markets. And what it has done is it's created competition in both the currency markets, the commodity markets, the stock markets, bond markets, and the desired effect of increasing competition globally is a very, very positive thing. Government can no longer have monopolies over their currencies, commodities, stocks, bonds, and whatever, and implement, procedures. And now they've got accountability. So the SEC, when I saw this bunch of, old white American men trying to determine the future of this technology, it was very good that they're now taking it seriously. They all asked their children, are you going to invest in? Absolutely not. I'm interested in crypto. Are you going to have a pension scheme? No, I'm going to hold Bitcoin. Are you interested in taking your company public? No, I'm more interested in launching a token. And so all these regulators, CFTC, SEC, now need to recognize they don't have full jurisdiction. They can't overreach beyond their jurisdiction because these tokens, these currencies, these commodities, these semi-stocks, whatever you want to call them, operate on a global scale and hold every country accountable to a new standard. So what was bullish for me was to see, for the very first time, everybody recognizing that's important in this industry. This is actually a systemic event. Could actually disrupt our entire industry and everything we know. We need to do something now. We need to we need to embrace it. We need to take a regulated side to this, and we also need to accept that there is going to be disruption from the unregulated side that's going to keep us honest. So I believe the net result of this is that regulators are going to have now, the question always was with regulators, the criticism of regulation was always who regulates the regulator. Well, now you have decentralized technology, open source projects that are now going to grow bigger than their regulated financial systems that now operate, in a competing environment to regulate the regulator. And then you want markets which, have this regulated environment, for example, the transfer of fiat to Bitcoin. And then you've got decentralized stuff. So I'm just so excited to see in that Senate hearing that we are now where we were meant to be. This little experiment that Bitcoin created is now here, that no one can ignore it. And we're seeing, policies at the highest levels. You might hate those policies, but guess what? They compete with the unregulated, decentralized version, and there ain't a thing that anyone can do about it, which is just such an interesting time. It's so bullish for our industry, and it's great that everyone can get 50% discount on all their Bitcoin and their pension scheme in a time like this, simply because the market went up too quickly, and now it's here. So I'm really bullish on what we saw. It was just an exciting thing to see. And hey, these ICOs did need regulating. They are securities. The SEC will call them securities. we've always operated at Bank to the Future that they are securities and made sure the appropriate people are investing in these and treating these things as they are. But if not, the utility side can continue, and it doesn't affect things like Bitcoin, which clearly is a blockchain, not a security, versus a company issuing an ERC20 token, which clearly is a security after this. And then we'll see where that goes and what the policy is from here. And then we've got competing countries as well to make sure that everyone's kept check. So, US is not the place, to do all this stuff. This is happening on a global scale. And it's just a really exciting thing to be a part of. I said I'd keep it short. I made it long, but over to you.
Awesome, Simon. No, we love it, man. We will probably have to ask you to see if you can mute your video because you are breaking up a little bit, but we definitely got almost all that. And really thankful for your comments. We'll have you turn off your video so we can just hear your audio, and hopefully that should improve it a little bit. But absolutely incredibly good comments. I have to share again the same thoughts as you, Simon. This is incredibly bullish, in my opinion, for crypto and Bitcoin in general. And again, with this 50% discount, it is absolutely one of the greatest times to be able to get in now. Everybody was screaming at that 20K level, please, look, when can I get in? When can I get in, right? Everybody was screaming, when can I get in? But, now that you have your in, go ahead and do it, of course. But now that we have the in, people are just screaming that it's going to go down forever. And, it's really interesting that you said, Simon, that you have always treated ICOs as a security. I mean, I think you and Tone Vase are the only people in the space that I've ever heard consistently say from the beginning, as in for years now, that all ICOs are securities. One day, the U.S. government's going to come and declare ICOs as securities. And so that we're starting to see that happen now. We're starting to see that from comments from the chairman. And it looks like maybe the ICOs, maybe people won't be so bullish on those ICOs anymore because, again, I think that for the most part, people are going to probably go to security tokens, at least for the U.S. And that's probably going to take over ICOs for the most part. We'll still have some ICOs, but for the most part, I don't think that really they're going to let U.S. investors deal with too many ICOs. So very interesting comment, Simon. Thank you so much. Let's go ahead and go into the next person here. Have we heard from Marty yet? We got to hear from Marty, I think. Marty, have we heard from you yet on this subject? No. Sorry, I got so many people here, ladies and gentlemen. Let's hear from Mr. Marty Bent from Tales from the Crypto. What are your thoughts so far on the discussion and on these comments?
Yeah, I guess I just have to echo what everybody else is saying. I think it's overall bullish. I too was surprised at how knowledgeable Giancarlo and Clayton were on the subject. Specifically when Clayton said that we need to separate cryptocurrency from ICOs. I think them being able to de-alienate between the nuances in this space is very bullish to see. And then one thing that hasn't been mentioned yet, but I'm sure everybody got a nice chuckle out of, was hearing HODL in the halls of our Congress. I thought that was a moment, I think, where you have memes taking over the world in HODL, even though Giancarlo didn't really give the correct definition. It's not hold on for dear life. I think that's positive, that it's just in the psyche that meme is sort of permeating the culture. And I'm a huge believer in long-term thinking. And I think this was a huge step in the long term of sort of implanting Bitcoin in the lexicon of everybody around the world. And to hear HODL in Congress was definitely something that made me laugh.
Absolutely. And remember now, HODL is in the record forever, ladies and gentlemen. It is in the U.S. public record that will stay there for life, that researchers hundreds of years from now can come back and say that this was the first time HODL was officially recorded. So very, very cool stuff. Yeah, they actually mistook that, a bit of a misnomer there. Of course, it was from, or its original source was from somebody misspelling it on a chat room from being slightly inebriated. Let's go ahead and go to Mr. Alex Bosworth, the last person, last but not least, that we have not heard from yet. Again, Alex from y'alls.org. Let me ask you, Alex, what is your take on what's happening so far, the discussion and the chairman's testimonies?
So I haven't paid too much attention to the regulatory aspects, but one thing that is interesting to me is that there's a lot of new people coming into the space, especially like institutional investors, and they need to have a safe way to go in, and they need the signals there to be right, that that it's safe for them to get exposure to this new asset class and they need to figure out how to make that happen. And actually, that is happening at a very rapid pace. So the fact that more guidance is happening is probably good for that.
Absolutely. I mean, this is what people have been screaming for, right? Is guidance. Like, please, like SEC, give us some damn guidance. A lot of ICOs have been screaming that all the last year. So I guess the guidance that's coming down is you're all securities. I think that's pretty much what we've decided here. And even if that's the case, that is at least some guidance. All right. Does anybody have any final topic? Anything final to discuss on this subject before we move on? No. Marty, go ahead, Marty.
No, I just wanted to point out one thing that Giancarlo said during that. I was very happy to see that he's sort of encouraging this younger generation to build something, even though he might not understand the technology fully yet. I would argue that nobody does, but just to see that sort of laissez-faire mentality of, hey, let's figure this out. This young generation's excited about it. When he referenced HODL, he was talking about his niece. So it's nice to see that they're talking about younger generations, because like you were saying, like some of the older senators who were speaking on this panel, is sort of mind-blowing how out of their depth they are when it comes to technical issues like this. And I think sort of the intersection of the old world and the new world in Bitcoin is a very interesting place, and to see sort of old school guys saying, hey, we should let these young kids sort of figure this out that was very good to see, in my opinion.
Very interesting. Yep, very, very true. I mean, it was he was referencing his niece and his nephew on that. So yeah, this crypto, man. This is what people are getting into. The younger generation. You just can't expect them to care about a vault full of metal as much as these amazing apps that we can now download on our phone and interact with, and see the real value, being able to trade live and take advantage of all this utility that is continuing to come out. So let's go ahead and move on to the next topic here. Before I do that, if I could just ask everybody to please give us a thumbs up. If you're new to the Crypto Network channel, please hit the subscribe button. We have a lot of content here that we push every day, all day long, every day of the week, 24/7 out here on the World Crypto Network. So we really appreciate you guys hitting the thumbs up, because that gets us into more people's feeds. So let's go ahead and move on then to the next topic. Let's talk about Bitfury, because Bitfury has recently got into the chain analysis business, I guess you could say, kind of like Jeff Garzek's company. And they've taken a lot of criticism, for me especially. In fact, I did tweet out to George, the CEO of Bitfury, a couple weeks back, which of course he insta-banned me afterwards. So I wanted to get some discussion here going about what people think about, what people feel about how Bitfury is or what Bitfury is doing here. So I'll first ask Simon here, our special guest, Simon from Bank to the Future. Simon, what are your thoughts on Bitfury launching this Crystal platform, which allows authorities greater analysis into the Bitcoin blockchain and various other blockchains as well?
I've got mixed signals about it. Can you hear me okay this time? I decided to go inside. Hopefully I got a stronger signal.
Yep, absolutely. Can hear you. Yep.
Yeah, well, as this regulatory environment unfolds, they are gonna require companies, brokers, and all these regulated institutions like ours to actually do some kind of analysis on where the money is actually coming from. It's interesting, since I've been speaking with a lot of fund managers new to this industry, they are actually paying a premium for virgin Bitcoins that come direct from miners, so that they know what the history of those are. And so people are willing to pay more in the traditional investment landscape because they're scared about their liability of proving source of wealth and all that stuff. It's just kind of another example of this old world meeting this new world and collisions that happen in between. So, Bitfury, a very early adopter of this technology, they were very early to the race in developing chips. Someone that's been supporting the industry. And then suddenly they start to become very big. They become large financial institutions, and they start to interact with governments and policymakers and all this types of stuff. And then to try and be responsible, to try and help the industry grow, they end up, engaging in a different rhetoric to what the Bitcoin originally started with. Originally we were talking about peer-to-peer anonymous transactions. All of a sudden we find ourselves pitching, oh no, this isn't for criminals. The blockchain is accountable and everything's transparent. All I think the end result is that a lot of people are going to try and build these types of tools. And it's going to drive people, either the core development team to actually start developing, more fungibility, more privacy types of features within Bitcoin based upon these tools. And it's always going to be a cat and mouse race. Or we're just going to end up with Bitcoin being the world reserve cryptocurrency of all cryptocurrencies, and then completely privacy type coins like Monero and other things that come along, kind of serving different user cases. But the reality is that although it's very easy to criticize Bitfury for doing such things, we do need really advanced tools to be developed so that we can figure out the direction to take the protocol next. And so the more advanced these things get, I mean, I'd rather have Bitfury developing them than the CIA, and then the CIA using Bitfury's tools. At least then it gives some kind of insight. But yeah, I mean, this is just a mixed views. You can see both sides of the argument. But the reality is that, building the best things that can be built in order to de-anonymize these cryptocurrencies means that the core developers can work on things that anonymize them again. And so someone's going to do it, so it might as well be Bitfury doing it. Or you could just get very critical about them and kind of say you're going against the ethos. But that's kind of the phase we're at right now. These companies that are really defining which direction they follow, which kind of side that they're trying to work on, and that's causing some convergence and divergence within the community as this industry grows and starts to become bigger and bigger with many different parties involved.
Yep, definitely some good comments there. Let me ask you this, Simon: do you think that there will ever be a convergence? Will one side concede to the other at some point just due to the success? For example, if we have technologies like CoinJoin, zero link, confidential transactions, and on and on and on, right? If we keep pushing this, will one side eventually just win, or will it really be this dualistic kind of dual system where part of the system is KYC'd and part of it is not?
Yeah, I believe there's going to be a dual system. I think both have a user case. We're either going to move to the entire world wanting to be decentralized peer-to-peer and own their own private keys, but the reality is that not everyone's equipped to own their own private keys. Some people need centralized parties to look after them for them because they can look after them better than they can look after themselves. Some people need to use these technologies for different things. And I just think you're going to see a divergence in ideologies and solutions, not one size fits all.
Yep, and I think a lot of people misunderstand, like, Bitcoin being this one size fit all. But it's really going to do all sorts of things because it's so big and because it's actually decentralized. People will utilize it for different things. There's no hierarchy at the top to say this is how you must use Bitcoin, right? So because of that, people will use Bitcoin the way that they want to, and so there will be people developing privacy tools as they have and are continuing to do. And if somebody like myself, I would be interested in using these privacy tools. So maybe somebody else wouldn't, but I guarantee you there will be at least people on the side of privacy continuing to develop these tools. So we'll have to see where it goes. Let's go with Francis next on this. Francis, what do you think on the discussion so far about this? Do you think that this is a bad thing or a good thing, or how do you view Bitfury entering the space?
Well, I agree pretty much 100% with all of what Simon said, but I still want to talk, so I'll try to iterate on that a little bit. It's not a secret that Bitcoin transactions are not anonymous. We've known this for a really, really long time. At the Satoshi Roundtable in 2016, I remember one of the topics was the political window of opportunity to make Bitcoin fungible, and also the responsibility that we have to make Bitcoin fungible because fungibility will never extend backwards, right? So as time goes on, we continue to transact using private technologies, and then these transactions are in the blockchain forever. So it's just a fact of life of how Bitcoin works that anybody can audit it, and those tools have existed. It's just started from the Block Explorer was the first kind of tool to do analysis of the blockchain, and obviously they're getting fancier and more complicated over time. Bitfury developing it, I think, I have a little bit mixed feelings. I mean, I definitely understand why they do that. Is because I'm an auditor. I audit Bitcoin proof of reserves. The investor of my company, Cadillaxy, is Grant Thornton. So it's an audit and a firm. So I would love to have those tools. When there's a divorce and I have to come in and determine, who has the Bitcoins, which is something that people have to do. If you want to have any kind of use of your Bitcoin in a traditional setting, they need to be audited, they need to be traced. A lot of public companies are trading Bitcoins, and they need to be audited and traced to make sure there's no insider trading going on, and that kind of stuff. I mean, these are tools that given the fact that there's a demand for it, someone's going to build them and someone's going to make money off of them. Bitfury itself has been around for a really long time. They've been part of, all these big groups for a really long time. They're part of the blockchain, I think the blockchain consortium or something like that, which helps enforcement agencies advise enforcement agencies for Bitcoin. Bitfury is a huge company that has all sorts of different activities. But my feelings toward Bitfury are very positive. They've really helped develop the infrastructure of Bitcoin, and I agree with Simon. If someone's going to do it, might as well be them. And the fact that they're developing this means that they're probably getting paid a lot of money to do that. They can do some R&D into Bitcoin. The one thing I'll say, though, is like everything's fair game, right? Because this is how the blockchain works until you're going to try to block protocol changes, if that happens, right? This is the big problem, right? So Bitfury is also a huge mining company, and so far they've been on the right side of things, and that's really tremendously helped, UASF and SegWit and Lightning, that we had Bitfury kind of on our side. And if they have a conflict of interest for the next upgrades to Bitcoin, where they might want to block that, but I really do believe that they're smart enough to understand that their investment in Bitcoin is going to be worth so much more, so incredibly much more, if Bitcoin becomes private, because that's just going to suck all the wind out of all the privacy altcoins. And that's going to remove all sorts of problems which are currently preventing financial institutions from jumping on board, because financial institutions don't necessarily want billion-dollar transactions on the blockchain. That's too obvious and traceable and stuff like that. So mixed feelings. It kind of sucks that this is possible. I think we all wish that this didn't exist and this wasn't possible. But the fact is that it is. And I'm happy that Bitfury is going to be making some money off of that, because people have been doing that for a long time, and people are doing it. So might as well be Bitfury.
Yeah, I mean, I have to feel the same. I do have these mixed feelings. My main problem is that they think that they're doing good, right? This is my main problem, is that, look, anybody can only do what they think is good, right? They can only do what they feel is valuable. But to me, in my opinion, this is a problem where they think they're doing good, but in reality, they're doing bad. In reality, they're undermining the censorship resistance of Bitcoin. So in my opinion, it's hard to have mixed feelings, but I mean, in my opinion, I just have to say that I really don't think that this is a good idea. And I think that there's enough people out there who also don't think this is a good idea, that they will continue to develop more and more privacy tools. And remember, Lightning is encrypted by default, right? Lightning is encrypted by default, running over an onion routed protocol. So, we have amazing privacy on top of the Lightning Network. So that gives me some comfort, as well as, again, all of these amazing privacy tools that will continue to be developed, like, confidential transactions, zero net, and on and on and on. So let's hear from Mr. Alex Bosworth next. Alex, what are your thoughts so far on Bitfury starting this crystal platform and, fungibility, affecting Bitcoin's fungibility? What are your thoughts?
Thanks. Yeah, I have, also echo what other people are saying. Even tying back to the last topic, like, adoption is kind of a double-edged sword. So people who are coming in and, investing into Bitcoin, they don't really know, like, what really gives it value. They don't understand decentralization, and they don't understand fungibility as being, like, important to the system overall. So, like, even as much as we want people to come in, it's also important that they kind of know what they're buying and know what they're holding. And it's like an ongoing technical challenge. I mean, even in Lightning, I would say, has nice privacy characteristics, but it's not perfect. And there's also certain aspects to it that we need to improve, and that we know that we need to improve. And certain things are different. Like, if you send to the same person multiple times, you can actually see that it is the same person. So, because you maintain a consistent public key. So that's like a different privacy characteristic, and it's just something we're going to have to work with. But going back to, like, the adoption aspect, yeah, I think analysis, even if we're happy, like, Square Cash is adopting Bitcoin, like, well, they're going to have to do some kind of legal compliance, and these legal compliance regulations are unclear. They say you have to do your best, and so if they interpret them to say we've got to do our best by looking at where the funds are coming from, I mean, that's part of the double-edged sword of like adoption. And I definitely agree that you know, what makes a decentralized and trustless system is that we don't have to ask nicely to somebody to say, please don't do these bad things. You know, that the system itself can stop them from happening. That we have we use the technology to stop, you know, anybody from controlling it or anybody from compromising our privacy. And that's kind of like why, you know, things like zero-conf don't work, right? Like we could ask the miners to say, please don't allow double spends. But and they might even go along with it for a while, and then maybe if they start to like do some double spending in some occasions, we could be, you know, angry at them, or we could just build better systems that are not reliant on the miners behaving themselves. That, you know, cryptographically, that we get the proofs that the Lightning Network provide that you can't do this double spend. Yeah, so and it is a little bit strange. Like fungibility is so important to you know, the utility of Bitcoin. You know, that the people who are working on it, if they're involved in Bitcoin, if they're investing in Bitcoin, they should really, you know, I hope that they consider that like they might be doing something self-defeating. Like they might be like messing with the goose that lays the golden eggs.
Absolutely. Very good, very interesting, good points. You have to watch out. You know, we've seen a lot of early people in Bitcoin kind of bite the hand that feeds them, right? We've seen them kind of turn their back a little bit on Bitcoin, even though this is what gave them their kind of their influence and their power and their riches. So very interesting stuff. All right, let's go next with Mr. Daniel. Mr. Daniel Robinson, what are your thoughts so far on this topic?
Yeah, so I think I agree with everyone who says that this really emphasizes the need for better development on the core protocol layer for better fungibility and better privacy. I think in the long run, probably users will end up picking their trade-offs, like everyone said. And maybe a little more pessimistic on whether people particularly will care about it or are willing to sacrifice things. I mean, even in the absence completely of legal requirements, most people now are almost everyone is sending only unencrypted email that can be trivially read by the NSA or can be collected from third-party custodians with a warrant. And I mean, like it's ultimately, even if it isn't particularly more convenient, people tend to be fine doing stuff in the open and don't really and are happy to leak some of their privacy, just because usually it doesn't matter. And when there's a convenience privacy trade-off, people easily tend to pick convenience. And just there are reasons, as I think Francis aptly put, that sometimes you do want visibility, you do want provability about your money, you do want someone tracking and knowing about your money and their real features there. So I think in the long run, most likely, yeah, people will have to choose their own trade-offs, and possibly the more privacy fungibility focused solutions will be more of a backstop. But the fact that it's there, I think, will help, and it may be able to sort of prevent some abuses of the surveillance power. Just the fact that people would be ultimately able to opt out of it.
Yep, very interesting. And it is interesting that people, for the most part, tend to choose not to do privacy because it is more difficult. And I'm just hoping that this becomes more and more easier so that it's just privacy by default, right? That's where we want to go one day, is privacy by default. And I every time somebody mentions what you said about caring about privacy, I have to read Edward Snowden's quote, right? Arguing that you don't care about privacy because you have nothing to hide is no different than saying you don't care about free speech because you have nothing to say, right? So that people just need to like really wake up to this, that if it's not private by default, then somebody's gonna take control of it at some point. So awesome, Daniel. Thank you for your comments. Let's finally go to, last but not least, Mr. Marty Bent. Marty, what is your comment so far on the discussion?
Yeah, I mean, like everybody else said, I think this is just lighting a fire under the rest of the industry's ass, whatever you want to call it, to work on fungibility. I had Matt Corallo on the podcast, and that was one thing he was really worried about, is losing fungibility at the protocol level. But yeah, I think the scenario that Francis brought up of the conflict of interest comes when we try to implement security features on the protocol level, with Bitfury being a mining entity too. That'll be interesting to see how that plays out, because in my opinion, that's going to be the next huge debate of protocol upgrades is around fungibility and privacy.
I mean, absolutely. Now that we have SegWit, basically, right? Everybody's kind of saying that now that we have SegWit, the next thing is definitely scalability, right? With Lightning, and then after that, it's fungibility. Now remember that it's not a particular order because everybody's kind of working on everything at once, right? Because that's how open source development works. You want to work on what you're passionate about. So most of this stuff tends to kind of get worked on at the same time. But as far as I'm aware, the main focus right now after SegWit has been activated is scaling, right, with Lightning. And then after that, it's going to be fungibility. So I would say, the fungibility stuff is really going to ramp up next year, really ramp up next year to the next level. So, all right. So I think we're done with this topic. Let's go ahead and move on to the next, unless anybody's got anything to say. Simon or anybody, any other words on this?
Yeah, just a really quick thing. I'll invite all our audience to read the Cypherpunk Manifesto, which was written in 1993, which really outlines kind of those principles very well. And I'm just going to read off a tiny quote of it. It says, "We must defend our own privacy if we expect to have any. We must come together and create systems which allow anonymous transactions to take place. We know that someone has to write software to defend privacy, and since we can't get privacy unless we all do, we're going to do it." Right? So, I mean, it's really up to us as a community to implement and work on those privacy tools, and especially the people that are kind of influencing the direction of Bitcoin should feel that they have a really important responsibility and duty to the users that may not be aware of how unprivate Bitcoin can be sometimes, and if they make mistakes. And also they should understand that because the Bitcoin blockchain is immutable, those privacy mistakes will never be forgiven. And given the advent of these machine learning tools that will be retroactively be able to sift through the blockchain, not to freak anyone out, I'm sorry, but it's just we really must put a lot of effort. We focus on scaling and all the fancy smart contract things that we're building, which is great, but it's definitely time to take the opportunity to make Bitcoin more fungible while we still have a chance.
And I believe that we will do this. I believe that we won't let this just kind of like sit on the shelf or anything like that. I believe that there's a lot of work being done on there right now. And again, we have things to kind of keep us honest. We have competition, right, with something like Monero that can kind of just keep us on our toes. And this is something that we need is competition. So I'm just I'm still very hopeful that we're going to take care of this pretty well. Remember, it is still early days, guys. It's still a couple of years before the next halving. So I'm fully expecting this fungibility discussion to kick up to the next level next year after everybody's kind of implemented Lightning and after Lightning is really just permeated the ecosystem. So let's go on then to the next topic. Again, just ask you to please give us a thumbs up, subscribe if you're new to the World Crypto Network. We have content like this all the time, and let's go ahead and move on here. So this next topic is kind of interesting. I kind of threw it in at the last minute because I kind of wanted to talk about it. I figured everybody is probably pretty up on it, but let me just go with Simon here first. Simon, I don't know if you heard about this yet, but over there in Arizona, they're trying to get a bill passed to allow residents in the state to pay their taxes with cryptocurrencies. And so I wanted to see what your thoughts are on this, and maybe ask you, is this going to be a trend in the future? Do you think within the next few years that we will be able to use Bitcoin to pay with taxes, or is it kind of always or do we got like years and years to go before that will ever happen?
Really, no, I didn't know about that. So thanks for telling me about the story. I know the first government I met that wanted to do that was Isle of Man. And Isle of Man were exploring whether they could accept tax revenue in Bitcoin, which I think is a really interesting scenario. So the kind of the prevailing school of thought right now is there's a lot of, we deal with a lot of accredited investors that have earned their wealth in crypto. And in order to convert it into fiat, it's a taxable event. And so they end up, if someone wants to play by the rules and live a stress-free environment, they end up having to convert some of their crypto to pay their tax and then market to market, and this incredibly complex, horrible problem. And so it would be pretty interesting if you could actually just pay the tax in crypto and what impact that might have on tax collection. But I think the interesting longer-term really trend that people should consider is what I was speaking to a lot of smaller central banks a long time ago. They were kind of asking me what they should do about crypto. And I said they should take half of, the small, the Federal Reserve, the People's Bank of China, the Chinese central bank and the Russian central bank, they've got the most to lose from crypto succeeding. But what I was saying to the smaller central banks is I was saying, if you want to have a shot at being a world power in the future, then you should take half of your country's electricity, dedicate it to Bitcoin mining, and actually just sit on them and follow a HODL strategy with a percentage of your tax revenue or the Bitcoins you earn. And then one day, if Bitcoin becomes what it could actually become, then you could end up like Bulgaria, where some seized Bitcoin are actually worth more than your national debt, and the country actually has a sustainable strategy for actually going, paying down some of these Ponzi-like pension schemes and insurance schemes and healthcare schemes that every country has found themselves in as a result of fractional reserve banking. So I think what is more interesting is not whether they, whether they accept it, but they convert to stay tuned. And we are on our first step towards Bitcoin becoming a world reserve currency. And because the definition of a world reserve currency is, and the reason that gold was always treated as a world reserve currency is because central banks hold it. And so if central banks start holding Bitcoin and governments start holding Bitcoin, then we are actually on our way to not just Bitcoin being a world reserve currency for cryptocurrencies, but Bitcoin becoming a world reserve currencies for the world, which has vast implications on the valuation of Bitcoin and the price. So I think it's an interesting thing. And to answer the question, I think every government's going to look at this. The smart ones will recognize that they should accept some tax in Bitcoin, hold some Bitcoin, embrace it, become like Japan, figure out their policy, or they can just do the stupid thing like China, where they try to control it. And it might not turn out to be a stupid thing for their country because they're trying to become the next superpower, and they're actually a large enough economy to become a superpower, and they might be the next empire. But for the smaller countries, I think it's and at the state level, is probably a really wise strategy, and they should definitely hold those and actually implement some savings, the same things that they should encourage their people to do. And the same thing that Bitcoin did is it encouraged, for the first time, savings over debt.
Absolutely, savings over debt. So HODL, people, that's what you have to do. Teach your children to save. This is the most important thing. As all the statistics point out, Americans are really, really, really bad at saving. The average American has like less than $1,000 in their bank account. So, as Tone Vase, I like Tone Vase is saying, he always says, make sure to pay the least amount of taxes that you can legally get away with. And so that's always that's always what I try to tell people too when it comes to paying taxes. But yeah, I mean, here, let me ask you this, Simon, what do you think about this? Do you think that there'll be a tax event to pay your taxes? Will that be a tax event when you sell when you actually pay your taxes? Do you think they'll count that as a taxable event?
Yeah, I guess that's a little bit of what they haven't really thought through, because the taxable event becomes when you convert it to fiat, and if you're not converting it to fiat, there is no taxable event. So then suddenly the governments become currency speculators because they have to pick the date at which they market to market. And then maybe there'll be some price manipulation where everyone tries to crash the Bitcoin on April the 1st so that they reduce their tax liability. And all of the interesting things that come when you take this new asset class and try and shoehorn it into the old world.
Absolutely, yeah. I tell you what, I'm still going to probably be holding my Bitcoin and paying my taxes with fiat. I don't think I'll be doing that anytime soon. So let's ask Marty. Marty, what do you think, man? Are you going to be paying your taxes in the first state to accept crypto as taxes, Arizona? What do you think, Marty?
I will not be, because I have never stepped foot in Arizona. But no, I think it's a very interesting development that they're even talking about it. I had Chiefy Indom on the podcast a couple of weeks ago, and he's trying to convince one of the African central banks to put 1% of their reserves into the Bitcoin ecosystem. And that's going to be interesting to see when stuff like this starts happening. That's when I think the big dominoes start to fall. Once you have governments competing to acquire Bitcoin, that could be the precipice for hyper Bitcoinization or something like that, as they scramble to get some of the few Bitcoins that are out there on the market. But beyond that, yeah, I think what is even more interesting at a government level is when you have individual politicians buying and holding Bitcoin, because then it makes it harder to argue against it, and you find that the politicians will actually look to draft laws in favor of Bitcoin adoption and stuff like that. So there's a whole psychology behind it that's developing, and it's interesting to see it play out. I will not be paying taxes in Bitcoin. I do not know if that's a taxable event. And I think I saw somebody in the comments saying that the Arizona draft in particular states that they have to sell to fiat within 24 hours. So it doesn't even look like they're looking to hodl, which is not what I would recommend to them.
Yeah, I guess we should have probably expected that. Just like the early days of people accepting Bitcoin for payments, they did immediately pretty much sell to fiat, because again, people just don't understand this yet. It's just too early, guys. It's early days. People don't know why they need to hodl Bitcoin, at least not in America, not yet. But I'm pretty sure that we will be finding out. Go ahead, Marty.
Yeah, no, but I think we're getting close to that point where it might be riskier not to own a little bit of Bitcoin than it is to own a little bit of Bitcoin. And if governments start realizing that and investing a little bit, things could get weird fast.
Yeah, I feel like we're definitely approaching that point where it is riskier to not hold Bitcoin than it is to hold Bitcoin. We're definitely past that threshold, I think. Let's go with Daniel next. Daniel, what is your thoughts on the discussion so far? Being, having some information in the law area there. What do you see this as? Do you see this as positive or negative? Is this kind of like this first step to what we were talking about, maybe hyper Bitcoinization, or Bitcoin becoming this world reserve asset? Is this like another step towards that, or is this just a step towards the negative and bad for Bitcoin?
Yes, I mean, the bill seems a little dumb to me. I'm not a tax lawyer, and nothing I ever say certainly on YouTube channels is legal advice. But my guess is that probably it would be considered a taxable event, at least as the IRS is concerned, to pay your taxes, even if you transfer Bitcoin to the state of Arizona, and whatever they do after that, you're still receiving this tax credit in this particular dollar amount. And just like if you use Bitcoin to buy a car, that's still a taxable event. It doesn't have to actually involve conversion to fiat. So I'd be surprised if the IRS were to treat it that way. And then what you get sort of in return for that is you're paying your taxes in a way that is subject to some exchange rate risk that you're bearing. And generally when you pay your taxes, you want to pay the exact amount. So I don't really see how I would be practical for someone to, for example, to send the Bitcoin payment for the bulk of their taxes, and then whatever amount is left based on the exchange rate afterward, they have to send an additional check to get it in, to sort of hit it to the exact amount, or the government has to refund them. So as this bill is constructed, it doesn't really make that much sense to me. I would much prefer for states, and certainly for the federal government, to be reforming laws around taxation of cryptocurrency and what counts as a taxable event. And as I know Coin Center proposed an interesting bill to allow purchases of less than $600 when made with Bitcoin to not count as taxes, which helps a lot for just sort of ordinary accounting if you want to be spending stuff with Bitcoin. But generally, I mean, it seems sort of like a gimmick. Honestly, like Stripe accepting Bitcoin kind of was, and anyone, when it's a gimmick built around the idea of Bitcoin as a means of payment. It's sort of an efficient way for someone to transfer money electronically. And I think as everyone here has sort of noted, it doesn't involve the use of Bitcoin as a store of value. Ultimately, so I think it might be interesting if it gets passed. I bet it wouldn't get much adoption for sort of the reasons I stated about inconvenience. But ultimately, I mean, hopefully these legislators get a little more advice on what actually regulatory reform really does need to be done. And I think there is some at the state level as well as the federal level that could really help.
Yep, could be some interesting first steps, to allow more and more to lend, I guess, more and more credibility, you'd say, to crypto for people in the mainstream to kind of understand. Because when you can say to a regular, average working Joe, be like, yeah, you can pay your taxes with Bitcoin. That to them, kind of makes them understand it as a more legitimate currency. When of course we all know that Bitcoin and crypto is far more legitimate than any fiat currency out there. But very, very interesting stuff. Thanks,
well,
Daniel.
it is a lot of a lot of the gold bugs, and like a lot of people do make that the number one objection. They say it's not money unless you can pay your taxes with it. So if it takes that one out, then that's just another one ticked off the box of the objections that people have.
Absolutely, absolutely. Now, of course, as Daniel said, I don't see this getting much adoption, getting much uptake, because we've already seen that crypto people have kind of, how should we put it nicely, pushed off paying their taxes to more of a later date, and things like that. So I just don't see it actually taking much adoption. But like you said, Simon, that would be cool if we could just, take one more thing off the box there. Absolutely.
And the other thing is, correct me if I'm wrong, they don't accept pounds, they don't accept euros, but the first currency they do accept that's not the dollar is Bitcoin. Isn't that interesting in itself?
Very, very interesting. Absolutely, Simon. Good point. Very interesting. Let's go with Mr. Alex Bosworth next. Alex, what are your thoughts on this so far? Will you be moving to Arizona just so you can pay your taxes in Bitcoin?
Maybe Puerto Rico is more likely because of the capital gains. Well, I think that government and blockchain are a good match. Previously, I worked on this project, which is called Royal Mint Gold, and that's a project with the Royal Mint of the UK and Chicago Mercantile Exchange. And it kind of ties back to the previous topic about fungibility. It's like I worked on a fork with BTCD to track gold tokens that the Royal Mint would issue. And this is something that they thought was interesting, is that, people would be able to see the gold actually being traded versus, just sitting in a private database with an individual vendor that was helping them. And that's the other part that I think is attractive to governments, is that with blockchain, you don't really have like a lock-in. So, they were interested in this project because they could say, I can go to the Chicago Mercantile Exchange and they can be my vendor. But I can just take the same blockchain and just spin up some nodes somewhere else, and I can get another vendor involved too. And that always bugs me when I pay taxes, that my options are like Visa or MasterCard, and usually the government will put the fees on me. So it feels like, there's kind of potential for a low level of corruption there, where it's just you've got two options, and those kind of, guys who are allowed to do digital payments have kind of locked in all of that revenue there. And I do see, in the long run, this making it kind of more of a fair process where, anybody can kind of compete for those fees, or maybe there's no fees when you want to pay, digitally pay your bills to the government.
Very interesting points. Very interesting points indeed. Let's go to our final panelist for this topic, Mr. Francis. What are your thoughts so far on this?
Yeah, well, obviously, a lot has been said in the conversation. It's a great conversation. So I'm not going to say it's anything bad, but I'll agree with Dan on the first part that I think it's kind of more of a novelty thing. But it is extremely cool to be able to pay your anything with Bitcoin. It's always fun, and there are legitimate good uses of Bitcoin as a means of payment. There's no chargebacks. There's the authentication is done using public encryption. So even as a method of payment, like Bitcoin, it's still kind of good. Although it doesn't. I agree that it's not really a significant transformational event unless the merchant is accepting and holding Bitcoins to some degree. Otherwise, this is for this reason, for example, that I'm not super interested in all the altcoins, and I don't really care if someone's using Litecoin, buying Litecoin to spend and then something like that. Same thing with BCH, like Bitcoin Cash. Most of the merchants that accept it will just dump it right away. So it has no real significance if it's not being held to some degree. But I think that we're gonna. They obviously when they see am I still there, Vertex? Oh yeah. Okay. I think I bugged out.
You did break out just for 1 second, but you're back.
Okay. Yeah. So I mean, obviously, governments are holding Bitcoins. We've seen it with Bulgaria with different events where some Bitcoins are either. And I mean, I think it's just governments are also competing against other governments to get ahead. And I don't think that politicians and bureaucrats really have the full picture to understand that to some degree they're undermining themselves or cannibalizing themselves. I mean, not a lot of people really understand how fiat works. Certainly not a lot of politicians understand how the federal the fractional banking reserve system, the federal banking reserve system allows states to have some kind of control or global homogeny, and where the value of the dollar comes from is from coercion and war and forced demand, and the threat of violence attacks. I don't think a lot of people like have this information or this understanding, even though they do work for the government. And I totally agree with Marty also that a lot of smart, really important, really influential people are holding Bitcoin, and Chiefy's been doing a really good job over there. But I mean, there's a lot of a lot of smart people are going to be telling the government, hey, you should start playing with private keys. I was invited by Hydro-Quebec, and I suggested to the pension fund of the state pension fund, you should put like 1% in Bitcoin. It was like an audience of 200 people, and that wasn't weird or anything. It's that you should put 1% of the pension fund in Bitcoin, because if there is something that happens to all the correlated asset classes like bonds, stocks, currencies, which all have in common the fact that they're powered by the fiat banking system, you just use that as a risk mitigation policy. I mean, it's totally conservative to do that, because otherwise you're putting all your eggs in the fiat basket. So governments kind of playing around with taxes, even though they collect it and they dump it. Like if they're actually collecting it, like that would be amazing. I mean, I'm hoping they're not using BitPay or anything like that. I'm hoping they're collecting it directly. But even if they're collecting it directly and dumping it, just the fact that they're holding the private keys and playing around with them, and as a Bitcoin holder, you don't want your Bitcoin to be only useful in a post-fiat world where governments don't exist and there's no accounting or anything like that. Like you want to use your Bitcoin holdings for stuff, to make corporate acquisitions, to do stuff like that. So if governments and like all these firms are getting the expertise internally to handle actual Bitcoins, some of their immediate oppositions to Bitcoin are always usually like small practical things. But what if I lose my keys? All that kind of stuff. So if that reality is getting penetrated, embedded in the institutions, and the expertise is being acquired, I mean, I think that's good news. Yeah. And regarding a taxable event, a big problem, at least in Canada, is if you trade crypto to crypto, that's a taxable event as well. So you can have a debt in fiat and not to the government and not ever have any fiat, right? So you can trade Bitcoin to Ether and then back to Bitcoin, and then you owe fiat to the government. So, and then obviously, if you want to pay your taxes on this taxable event, you need to dump it somewhere and like withdraw it. So clearly, I mean, they would be certainly useful to pay. At least in Quebec and Canada, it would be extremely useful to be able to pay the government without having to like dump on an exchange. In Canada, the exchanges aren't not that good as well. So there's limited options.
Yeah, that sounds pretty horrible, man, having to actually pay taxes on crypto to crypto, especially for all those day traders out there. I'm sure that probably scares the bejesus out of them. But yeah, that's not the case in the US, and I'm sure most other countries. So hopefully Canada can maybe amend that at some point if they want to.
Sorry, very quickly, because there is certainly now after the tax bill, it appears that you're going to have to pay taxes on crypto. Generally, as I understand it, the consensus is that you should have already been doing it, and that they weren't eligible for it. But again, not a tax lawyer, not legal advice. Sorry.
Is that for the U.S. or just Canada?
So ask your accountant in the U.S.
Yeah, and it's a gray zone. It's all a big kind of gray zone, and obviously, the regulatory agencies, they're double taxing everywhere. I mean, they're going to want to treat every possible thing as a taxable event. Clearly, right? Because they want more revenue. So I mean, as well, this is still kind of unclear. Like for example, in Canada, I'm really hoping from some clarity that if you're spending Bitcoin for something which is not like, I'm not spending Bitcoin on a bar of gold to cash out my Bitcoins. I'm spending Bitcoin, at the shop. I would really like there to be an exemption just for practical and compliance purposes, because it's going to be just everybody's going to be uncompliant. And, if all the little spending you've ever done, and with that knowledge, I mean, it's insane to know that every single Bitcoin user out there, if you dig deep enough, he sent Bitcoin to Wikipedia or something, but I mean, it's that kind of stuff, right? So there's not a lot of clarity as to these things. So same as Dan, I'm definitely not a lawyer.
I hope that
Yeah, but
I
the
mean,
crypto taxable event, I mean, that's something that we really should be like just keep it in mind. Like ICOs, all that kind of stuff. Like we've all done stuff that we may not think are taxable events, but probably in the mind of the regulator or a taxation agency in like 3 years, retroactively, you should have known that it was a taxable event. You know what I mean? That's how they operate.
That's how they operate. But what I really hope is that this discussion kind of highlights how unenforceable, like how ridiculous it's going to try to be for these tax agencies like the IRS to try to come after people for every single altcoin swap they've ever done, for every single Bitcoin purchase. And, when it gets to be Lightning, it's going to be really fun, right? Because then you'll be able to make tons of small little purchases completely encrypted. So that's going to be really, really fun. Does anybody have any other topics or any other discussion left for this topic?
Yeah, like really quickly, don't underestimate them, because they're going to be making examples. They're going to be enforcing this like really harshly on some people to deter. And they will hire experts, by the way. Like I know we kind of tend to joke that these regulatory agencies, they're not really up to the tech, but they do hire like the experts to tell them what to do. So yeah. So they're going to be well informed. Yeah.
Crypto to crypto tax sounds like about as enforceable as a war on drugs, but maybe that all goes full circle, and Bitfury comes in and they develop some technology to do the crypto to crypto tax.
And there's going to be some scapegoats, right? There's going to be collateral damage. Like, of course, it's not enforceable, but some poor person out there is going to get the full blunt of the law for some crypto to crypto trading. That's look at Ross Ulbricht. They cannot censor the dark web and all those things. What they can do is destroy the guy so harshly that is made an example publicly. And this is specifically what they said in the ruling, by the way. So I mean, it's the modus operandi, like the textbook.
Yeah, and we can see that excuse me, deterrence is like their main tactic, right? This is because they know they can't enforce everything. Their main strategy has always been deterrence. Screw over one guy so that maybe these other 10 guys think twice about what they're doing. And as we've seen with the Ross Ulbricht case, it has done nothing, right? The dark markets are huger than ever. I mean, 15x, at least 20x from what they were in 2013. Just massive, and one can go down like one has done recently over there I think it was in Russia based, and it just still goes. There's another one that will replace it the next day, so they know that they can't stop it all. So they try two things, right? They try deterrence, and then they try to just take out the biggest. They try to take the big fish. That's kind of their two big tactics for handling this. And that's okay, but that doesn't scale. That's not going to scale in the world of crypto. That might have scaled in the world of fiat and the traditional financial system and things like that. But I assure you, I really don't think that's going to scale when it comes to crypto. So I think we can close out this subject with that. So awesome topics, guys. Lots of great discussion. I hope everybody learned a lot. We had over 900 people there at the height of joining us live. So thanks to all those who did join us live. Thanks to all those in the chat. Really appreciate it. Had a good time. Let's go ahead and say goodbye to our guests. So Mr. Alex Bosworth, where can we find out more about you?
Yeah, thanks for inviting me. It's been great. And I've been working on a bunch of Lightning stuff. You can definitely check out the y'alls.org and htlc.me if you want to try out Lightning right away and see what it's like. And it's got a bunch of links on there to different Lightning wallets that are pretty accessible. You can put it on your Android phone, put it on your desktop. And I'm also on Twitter, Alex Bosworth.
Awesome. Thanks so much, Alex. We had a big panel today, guys. I try to keep it around a medium size, but today I felt we just needed a bigger panel. I try to bring as many opinions to you guys as I can, and I really find it important to try to continue to bring more and more people on, different people on. I try not to have the same people on every time, but when you're as awesome as Francis and Daniel, sometimes I gotta have you guys on again. So Mr. Daniel, where can we find out more about you?
Yeah, so probably the best place is on Twitter. I'm at Dan Robinson. And if you want to check out Ivy, you can go to ivy-lang.org. That's our Bitcoin smart contract language and ID. So ivy-lang.org.
Definitely recommend that, guys. Check that out. Ivy, it really is simple to use, guys. If you're a developer out there and you want to learn more about writing Bitcoin code or smart contracts on top of Bitcoin, please check that out. Ivy, for the IDE, and it's really, really great. So let's go to Francis next. Francis, where can we find out more about you, sir?
Right, so I hang out a lot on Twitter, so at Francis Pouliot, and I also hang out in Montreal. I run a kind of a big Bitcoin private club, members club there, co-working space. So if you're in Canada, definitely reach out and check out the Montreal Bitcoin meetup and the Montreal blockchain meetups. And yeah, my websites are cadillac.com and bills.com.
Yes, very awesome. Sorry guys, we usually have lower thirds there on the bottom. We have on the screen we kind of say where we're from and everything like that. But Google has has that feature down. It's been down now for a couple weeks. We don't know when it's going to come back. So we appreciate you guys bearing with us for that. So Mr. Marty Bent from Tales from the Crypto podcast, where can we find out more about you, sir?
Yeah, so Twitter is probably the best place to find me, at Marty Bent. I do have the podcast Tales from the Crypt. No O. Decided to drop the O. And
My bad.
Then I also do a daily newsletter, Marty's Bent. You can find a link to sign up to that in the bio of my Twitter profile. Basically, a skim for Bitcoin, trying to help people entering the space sort of get a better understanding of what's going on from my perspective, trying to help from an education perspective.
Absolutely. So lots of good interviews, you guys. Lots of good interviews that Marty has on his site. Tales from the Crypt, not crypto. I get that mixed up.
Tales from the Crypt, yeah. You can find that on iTunes, Stitcher, and then there's an RSS feed as well that you can find that's in our Twitter account.
Awesome. So check that out, guys. Again, I'll have everybody's Twitter in the show description after the show is over. And finally, Mr. Simon Dixon, who has joined us a bunch of times. Every time we thank him so much for his knowledge, so much knowledge on the ground from traveling the world, running Bank to the Future. Simon's always got some kind of amazing project in the works. So Simon, thanks again, man, so much for joining us, for donating your time. Where can we find out more about you?
Twitter at Simon Dixon Twit. Simon Dixon was taken, so I'm Simon Dixon Twit. And for those that want to launch Reg D compliant tokens or equity or securities, we've been doing those at Bank to the Future for a long time, and those accredited investors that want to invest in this sector as this regulations fall and have some kind of security, I guess, that it's been done in the right way and it's not about to be shut down. That's what we do.
Awesome, Simon. Thanks so much for joining us, man. So everybody check that out. Simon has early investments on a bunch of different projects, from exchanges like Bitfinex to MadeSafe to all sorts of stuff. So guys, definitely check that out. And we will be back again, of course, next Sunday with Mr. Trace Mayer. Trying to have more and more special guests on. We're trying to talk more and more Bitcoin. So thanks again so much for joining us. Thank you everybody for joining us in the chat. Again, thanks to all my panelists for donating their time. We will be back again every Sunday at 12 p.m. Pacific right here on the World Crypto Network. So until next time, guys, thanks so much. And please keep talking Bitcoin. We'll see you guys later. Bye-bye.